Welcome back to Udomo. This is my AI covered call model, which attempts to predict which option strike prices will be in the money by end of week. Prediction of 1 means in the money by end of week, while a 0 means out of the money. Stay until the end because I will show you which calls I have sold. Now, first, let's get into some news. Today is January 20th. As of recording, stock market experienced sharp declines in the month, with S&P 500 falling 2.1%, Dow Jones dropping 870 points. With some key reasons of the decline: Greenland tariff threats. Over the holiday weekend, the White House threatened 10% tariffs, potentially rising to 25 by June on 8 NATO allies, including Denmark, France, Germany, and the UK, if they continue to oppose the US proposal to acquire Greenland. Trump wants influence over Greenland because of its key geographic location for military strategy against Russia and China. There are also retaliation fears. European leaders have called the threats unacceptable and are reportedly considering the use of anti coercion instruments, a policy designed to level massive counter tariffs on U.S. companies. Today, we had a large tech sector sell off. High growth tech stocks, particularly the Max 7, led the losses as investors rotated out of risk on assets. Nvidia, Tesla, and Amazon all saw declines between 3% and 4.5%. That being said, I continue to invest in America. I have invested over $6,000 today into Amazon, taking advantage of this dip in the markets. Before we continue, you can see my market beating portfolio stock positions at udomo.com. In 2025, Udomo is up 42.9%, while the S&P 500 SPY ETF was only up 16.6%. So Udomo has beaten the market by 26%. Udomo's philosophy is to find dislocated yet high quality stocks that are generating strong top and bottom fundamentals. Udomo also offers dashboards so you can visualize balance sheets, income statements, and cash flows. You can also leverage our API to download financial statement data into our Excel or Python projects to feed your spreadsheets, forecasts, and AI models. Creating an account is free. Check out udomo.com for stock analysis tools and solutions. Now for my covered call positions, I have a Toast $36 call, average credit of 27 with a current price of 25 going out until expiration date of January 30th. This is above my entry price, so if Toast goes to 36, I'll be positive either way. Google is one of the positions that I strongly believe in the long term, so I do want to be conservative with my long position on Google. Average credit on this 342.5 call option is 17, expiration date of January 23rd, so this Friday. Again, I want to be very conservative with this position, but slowly collect some quote unquote passive income along the way would be a benefit. I also have a 317.5 call for Adobe. This is average credit of 10, expiration date January 23rd, again this Friday. This is a poor man's covered call for Adobe. High risk, high reward scenario. However, if you do want to check out my thoughts on Adobe, check out the video on the top right where I do an analysis on Adobe's fundamentals. Check that out if you're interested. I've not sold a Amazon covered call yet. Tuesday was such a down day, I figured to wait until Wednesday to sell a Amazon covered call. The model suggests a covered call above 252.5, but since Amazon was down around 3% on Tuesday, the premiums on these 252.5s and above are basically now near zero. Given the fact that the stock's already down 3%, I might sell something below 252.5 and try to collect some premium. But again, maybe a covered call that has to go up 5% to break even or something like that, where the odds are in my favor. February is also a big earnings month. Amazon is part of that earnings, so we will see heightened premium as excitement for the earnings season comes due. For the sake of this video, let's assume I only produce $5 in covered call premium this week on Amazon. That's going to amount to $59 in covered call premium this week. Now, $59 might not sound like a lot in the upfront. However, if you were to times that by 4, since there's 4 weeks in a month, times that by 12, that comes out to $2,832. So if we can do this consistently and grow our portfolio over time and buy high quality growth, fundamentally intact companies, I would happily take an additional $2,800 in my portfolio. Of course, covered calls do introduce new risk in your positions because you cap your potential. However, covered calls, the probability is in your favor, and we can continue to build our positions in high quality companies like Amazon and Google. For the long term, I think we will be okay. Of course, not financial advice, but this is me sharing my financial journey with you. What do you think about covered calls? Check out my video on covered calls if you want to learn more. And thank you for watching Udomo.